Good morning, good evening, good afternoon to wherever you are in the world. Welcome back to another episode of the Coffee Hour where we're going to be going over some market news. All right, we got some more information about the Clarity Act, which we're going to be covering here. It's more or less just a blurb. It was a whole interview on CNBC with Brian Armstrong. But we're just going to cover a quick snippet of it. We're going to be talking a little bit about, what's going on with gold. We're going to be talking about what's happening in the private credit market. There seems to be a huge panic in that area. And it could be a potential, sign of what's to come, especially when it comes to, investing in illiquid assets. Okay. Because that's essentially what a lot of these investors had went into. And of course, with private credit funds, they don't work like a stock. Right. So they can actually pause redemptions, which we'll talk about here soon. We'll talk a little bit about some crypto, some Bitcoin news, and then we'll move on to commercial real estate, some real estate news as well, because there is a lot going on. Again, today's news stream, though, I think is going to be a little shorter than normal. And excuse me, I'm still under the weather, but I think it's going to be a little shorter than normal. Not a whole lot was going on today, to be honest. But for tomorrow, I think the news will be pretty spicy because we do have CPI inflation coming out. All right, we do have the inflation numbers coming out. So let me just get this posted real quick because we do. They don't like to. Whoops. Yeah, they don't like to play nice here. So I have to actually post it to X because StreamYard does not work. So we'll get that going here just a sec. All right. Inflation numbers coming out. Let's close that out. Go to the profile. Okay. All right, guys. So that is done. Let's move on. All right. So boom. All right. So we got Chomps in the chat. Hey, Champs. Excuse me. I thought I was I can't read. I'm dyslexic. All right. So we have Champs in the chat. Yo, bro. Hey, welcome. All right, we also have William Landlord. Hi, Eugene. Hey, what's up, man? Free Hedonist. Absolutely. And we have Skeptic always in the chat. Always a pleasure to have you guys here. Let's see what else. All right, cool. So we're going to go through it. And Super Straight Guy says, at least YouTube is finally working after yesterday. Yeah, yesterday and the day before was kind of weird. I never really checked into why that was, why that was happening. But whatever. I think it was just a homepage. Like I was still getting notifications and everything. It's just the homepage wasn't working. It was kind of wonky, but it looks like it all came back and worked out in the end. Cool. All right, guys. Well, let's get into it. And of course, if you guys have questions, I'll be trying to get to them in the chat. I'll try to do my best to keep one eye on the chat and one eye on the screen. All right, so let's get into it. Okay, so S&P 500, we are down 28 basis points for the day. All right, year to date, we're barely breaking even. Again, we talked about this yesterday with, the simple, not the simple, with It's a Wealthy Life, Dan. We talked about this where there's, just this rotation happening and these, really crazy drawdowns is probably due to that. I mean, you probably have some sentiment in there as well. I'm sure if we checked Google Trends, you'd probably see is Bitcoin dead or is software dying or is there an AI bubble? I'm sure the trends would probably be pretty high for search history, right? Because that's one way to gauge, market, sentiment is by just checking Google Trends. So we have the S&P 500 again, year to date trading pretty much flat, right? I mean, it's not the worst, right? Definitely better than ending in the red, but obviously it's not the best, right? So, again, for the day, just down 28 basis points. All right, now for the iShares IGV Expanded Tech Software ETF, again, I like to cover this because, it gives us a better picture of what's happening in SaaSpocalypse or the disaster, right? Software is just taking a huge beating. Excuse me 1 second. I'm going to try my best not to cough into the mic. But anyways, software has just been getting absolutely destroyed. Okay. But there might be a rebound on the way. All right. There might be a rebound coming because it looks like, this sell-off has been pretty intense. If you look at it again from its previous all-time high, which I guess we can take October all the way down here, that's already a 30% decline. All right. So there is a possibility for a rebound coming. It's just, people have to remain patient. Okay. For gold, Up 28 basis points. Don't you find that kind of interesting? Down 28 basis points, up 28 basis points. But gold, there was a catalyst, and of course, the catalyst revolves around what's happening geopolitically. We're going to get into that a little later. But we also, again, if you're following the news, following what's going on in the broader world, Iran is starting to get real spicy. There's been a lot of movement of military assets into the area. Some posts on X basically are saying that there's a close to double the amount of assets in the area than there was in the previous couple of months. So there's a strong potential something could happen, or this is a strong posture to Iran. But whenever there's that uncertainty, whenever there's that fear in an area, usually gold will go up, right? Whenever there's monetary policy uncertainty, gold goes up. Whenever there's thoughts or talks or debates about inflation, gold will go up, okay? Because it is a store of value. All right, but year to date, gold is still the best performing asset. So again, if you got in at the beginning of the year, you should still be in the green. Again, this is just chopping sideways, not really doing much. I think it's probably going to be like this for probably a little while. I can't tell you when. Could there be a break up to the upside? I have no idea. All right. I haven't found anything that would suggest otherwise. But you can see it in the bigger world that central banks are buying up a lot of gold. All right. They're still buying up a lot of gold. Silver up 1.31%, right? Gold is up. So silver was up. And we can see that silver year to date is still in the green by 8%. So let's call this the second best performing asset year to date. We have Bitcoin still hovering below 70,000, not really doing a whole lot. It did touch the 66K range, but then, we had a spike to the upside throughout the trading day. All right. But year to date, still down substantially, just as bad as IGV. And if you actually overlay the charts for at least the year, IGV and Bitcoin, they trade almost pretty close to each other. At least the trend is. So this is why I like looking at IGV now, because it'll kind of be like a forward indicator when there's a risk on environment or risk on sentiment from investors. So as IGV starts to increase, we should, in theory, start to see Bitcoin start to increase. But again, that is not a for sure thing. But I just thought it was really interesting to hear that kind of perspective. Moving on, we have the sector rotation that we like to look at, and this is accurate as of February 18th. All right, so we're about a day behind. Again, energy for the 1 month is still up, just for the last day. A lot of rotation into energy, information tech. As you guys can see, people are getting back into IT, into software, into technology. Consumer discretionary still going up, and actually people rotated a lot out of real estate and utilities. All right, so I thought that was kind of interesting. We'll see how the next couple of days pan out, but over the last 5 days, right, pretty much this week, we see that utilities is still leading the way, and real estate is also up there. Comic Book, I don't know if he's in the channel, but Comic Book had asked me, what's the biggest contrarian bet in your mind? And in my mind, it would be real estate. I don't hold any position in real estate. I don't hold XLRE. I don't hold VNQ. I hold no REITs. I don't hold any of the high income, NEOS, what is it, IYRI, the real estate, income fund. I don't own anything REIT related. But in my opinion, it would be the biggest contrarian bet. And the reason is because it's just been in such a hellhole the last couple of years. Basically, it topped in 2020, the beginning of 2022, January 1st, and then it just had this really dramatic drawdown. So it still has not yet recovered from its 2022 highs. So coming from John Logan, hey, appreciate the comment. I don't think I've seen you in the chat before, so I appreciate you joining us. I have seen predictions for 15,000 an ounce on gold over the next 10 years. I've seen similar numbers. I've seen the same kind of deal. I have no idea. These are just predictions, right? I think Goldman Sachs, or is it Morgan Stanley? They have $6,400 or $6,400 an ounce for this year, or 6,200. I can't remember which one is which, but it's just showing that they're putting out the price predictions, and we'll get into that a little later. But yeah, it wouldn't be far fetched to believe that, because again, looking at what's coming in the future, we have a new Fed, we have interest rates getting lowered, we have the big print that is, or the gradual print, whatever you want to call it, quantitative easing, right? The government's going to print an obscene amount of money into the economy. So yeah, I mean, I could see gold reaching 10,000 or whatever it was, 15,000 over the next couple of years. But again, who knows, right? Nobody really truly has a crystal ball. You have to kind of see what's going on, in my opinion, what's going on in the bigger part of the world, right? Like at a big picture. You have governments that are just stacking an insane amount of gold in their central reserves. Let me see if I can pull up a chart for us. Banks, central banks, gold purchases. Let's see if I can find a chart for us. I think that would help. I know there's a ton of them on X, and of course, when I need it, I can't find it. If I come across it, I'll have to save it and then share it on the next stream. But yes, according to, we could check out AI real fast since we're talking about it. So key trends 2025, 2026, persistent demand. Central banks are not letting high gold prices stop purchases, with 95% of surveyed banks expecting to increase or maintain reserves in 2026. All right, the top buyer so far has been the National Bank of Poland. If you guys know what's been happening over there, Russia, Ukraine, Poland, of course, they're buying a lot of gold. So they were the top buyer in 2025, adding 102 tons, while China, Singapore, and Iraq have consistently increased their holdings. The top drivers of primary motivation for these purchases is to diversify away from the US dollar denominated assets and secure assets against geopolitical instability. Okay. The reason for this last part is because, again, the Russia-Ukraine war happened, and I talk about this probably ad nauseum, but the Russia-Ukraine war had happened, and the United States basically led the way to kick Russia off the SWIFT system, right? And that harmed them. That really did put a lot of pressure on them. So not only that, but you also have BRICS, right? The BRICS nations: Brazil, Russia, India, China, and Saudi Arabia, and a bunch of other nations are lumped in there as well. But they're moving away from USD, right? They're moving away from settlement in USD, and they're trying to get on this different monetary system. So in the bigger picture, it's just financial warfare that's happening in the United States is trying to maintain its USD hegemony, its strangle on countries using and settling in USD, right, as the world reserve currency. Anyways, beyond all of that, let's continue to move on. Excuse me. All right, here's the heat map. Again, we see a pretty muted day. There's some red. There's a little bit of green. Not exactly, nothing too crazy. I think tomorrow, because we're gonna have an inflation data come out, I think we're gonna probably have a pretty choppy day tomorrow until we get those numbers, and then we have to digest those numbers. We just had initial jobless claims come out, and they were surprising to the downside, which is good. But don't be surprised if we start hearing things like, oh, the numbers are fake, or the numbers aren't real, right? We've been getting a lot of that, or that the government is manipulating the data, which wouldn't be far-fetched either. So anyways, wanted to cover this again. You guys can see the rotation happening. Again, you still have software getting pummeled. You still have companies like Apple, Microsoft, Google, not really doing much. And people are moving to industrials, right? Specialties. You still have farms. Wow, look at that. Caterpillar, John Deere is doing really, really well there. Healthcare, all right. Healthcare not doing too bad, still up. And then the utilities, right? Utilities is the winner for today. But yes, all right. So I wanted to go over this video, especially for those people who are in the high yield ETFs, right? Or any ETF that is considered high income, right? I wanted to go over this. This is Amplify's CEO. We covered him yesterday. This is more or less an extended conversation, but he brought up some really good points. And, there's this talk of total return, right? So I just wanted to cover this piece really, really fast. So let's listen in on this.
You've done a lot with the ETF business, back to your Claymore days and everything else. I wonder if you could give us a little bit of, an idea of, in that kind of decades-long span of fund management and ETF activity, where you think we hit the real interest catalyst in having options-based strategies as part of ETFs? Was there
Okay, so he's asking him, when do you think option-based ETF investing or cover call ETF investing or all of these high yield product that are coming out, like when did that interest really start to sink in? Me personally, I did not really get into high yield investing until last year. 2025 is really when I started to get involved. Before that, I was mostly a passive investor, and I knew of NAV erosion. Because I did hold QYLD, XYLD, RYLD way back when it was like 2021, 2022. So I got to see it firsthand, what NAV erosion was. So I stayed away from that and then got out. But anyways, let's keep hearing. I just wanted to share that piece because I'm sure we have some old school investors in here who probably were also in the QYLD days.
a certain era, time frame, if you will, where people started to move a little bit more away from straight up dividend paying stocks and those income strategies to ones that were more focused on the use of derivatives to generate some of that income as well? Was there an approximate time frame, and what actually really got it going?
Yeah, Dom, I think it was about 10 years ago, roughly, that option income ETFs started to come on the scene. You saw ETFs like QYLD that were option income ETFs on the NASDAQ 100, kind of formulaic index products. In 2016, we launched our first product, Devo, which was the first actively managed option income ETF to write options on individual securities. For a number of years there until about 2019, there wasn't a lot of interest in the space. And then it really exploded with a variety of sponsors. And I think it was basically the recognition that options can be another tool in this total return equation. Most income investors up to that point in ETFs only looked at dividends and didn't think of writing options to generate option income. Indeed, there's maybe even some legacy issues with leaving too much capital appreciation on the table, and many have been burnt with covered call funds, specifically in the closed-end fund space. And I think the ETF space is always innovative, and they came to the table with a number of unique solutions that hadn't been done before in the closed-end fund space or in the mutual fund space, and were able to kind of find a unique recipe that attracted investors. Unfortunately, I believe, Dom, it's kind of jumped the shark now. When you see some of these yield chase or yield gamble type branded products that have over 100% yields, then you look at their total returns and they're down 70%. I think we've gone too far as an industry in some cases, and we're happy to stay in our lane at Amplify in the yield smart approach, diversified exposure that again balances capital appreciation with attractive income and tries to navigate that eye of the needle, which is not always that easy and really requires great financial advisors like Nick and his firm to do due diligence on the ETFs, but also understand clients' risk tolerance and time horizons. And that's a valuable service in an era where we have nearly 5,000 ETFs in the market today.
It's an interesting cautionary note from a guy who actually runs a firm doing options override strategies to say that maybe we've jumped the shark on some of these options override strategies. Christian Magoon at Amplify, thank you so much for the conversation. And Nick Ryder at Cathmere Capital, thank you.
So, I mean, what do you guys think, right? Like, did the ETF industry, right? Did Wall Street go crazy with this option income derivative strategy? And again, there's a factoid out there that says there are now more ETFs on the market than there are stocks. Okay, that is absolutely crazy to know, right? That's an absolutely crazy data point. Like, there's more ETFs on the market today than there are stocks. So I just thought that was an interesting interview. Again, this is coming from the CEO of Amplify, and he was talking about option income ETFs, high yield ETFs, just some of the key or the finer points. Interest was limited until 2019, right? Because you only had the QYLD, XYLD, RYLD, and any of the other. There were private cover call ETF variants out there, or private cover call strategies out there, derivative strategies, but those were more or less only for like high net worth individuals, right? That's when the mutual funds or the really the big wealth management firms were doing that for their clients, right? These were not available to retail, all right, in an ETF package. David Auerbach, who runs the ETF, he runs REIT, RIET, right? So he runs that. He famously said, and this has stuck with me ever since, that, and he said this about a year ago, maybe a year and change ago. He said that there is going to be more ETFs than stocks, and he also said that there's going to be an ETF for everything. There's going to be more ETFs because the ETF, wrapper, the ETF structure gives these fund managers a lot of play. It gives them a lot of room for doing whatever they want. So anyways, some more finer points, growth driven by investors realizing options can generate income alongside dividends, so no more investing in those grandpa dividend, blue chip stocks, things like, I don't know, Walmart, Costco, right? To name a couple, those blue chip dividend companies, or the dividend aristocrats, or the dividend kings, right? There's no need to invest in those when you could just invest in these ETFs that are generating, 8, 10, 12, 15, 30, 100%, distribution. Of course, the higher the distribution, as he was mentioning, becomes really unsafe, and you start to see these, total return losses. So I, again, thought that was really interesting, because the number one argument in the high yield space is, well, you got to look at total return. But you have someone like Amplify CEO that says, they're taking a different approach. They're not like the Granite shares. They're not like the Yield Max, the Round Hills, or anyone else. They're taking a completely different approach. They're worried about, they want capital appreciation for their ETFs. They want capital appreciation with a decent, smart yield. Okay. They're not aiming for the highest yield. They're aiming for smart yield. All right. So I thought that was also a very interesting point. So he also mentioned that, or he also warned that the industry may have gone too far with the extreme yield products, and Amplify shoots for a smart yield. And then that was pretty much the takeaways from this interview. I thought it was really good. People should pay attention, especially if you're in the high yield space. But I think retail investors, obviously have gotten a taste of all of this firsthand. By throughout 2025, right? That was the golden year. I think is going to be the golden year for income investing. Going forward, we'll see how that turns out. You still have a lot of new products coming out, guys. I mean, there's tons. We just covered a bunch of them yesterday, right? You have Global X, Edge Q, Edge X. You had GLDN, and you have SLVX from Nicholas coming out, and then you also had Weapon, WEPN, and NUKX as well. That's coming out in the future. I mean, you have just a ton of ETFs, and everything is, at least in this space, everything is becoming high yield, smart yield. I don't know, ultra yield, whatever you want to call it, right? They're all coming out with these new ETFs, and they're getting better. Some are getting better, right? I mean, you got to hand it to them. They're implementing different strategies. They're doing hedging. They're doing downside protection. They're doing this and that, and it's no longer just the capped upside cover call vanilla strategy. All right, so they're getting better. The industry's getting better. I think, again, this bear market that we're in, or this volatile market, or whatever you want to call it, this market we're in, I think it's shown a lot of the risks for these ETFs, and when you really should be in it. Because in a bear market, it really, a lot of stuff floats to the top, right? A lot of, I don't want to say the word, but a lot of stuff floats to the top. In a bull market, everyone looks like a genius. Every strategy works. But again, when you hold these things long enough, you see which ones actually are, I guess, half decent or good. So I just wanted to cover that. Here's some really big news. All right. Blue Owl, which is a really huge asset manager, it's a business development company, a BDC. This was huge news. They had a private investor fund, right? A private investor fund that was allowed for retail investors. All right. It was called the OBDC2. Okay. And they stopped redemptions on it. They halted redemptions a while ago because they were running into basically a liquidity crunch, right? All of their assets, all the money was tied up in the assets within the fund, and they had to basically halt redemptions. So this was a crack. A lot of people are saying that this is a crack in the private credit market. And this is, this could be harmful for, obviously, retail investors. So what happens when, they pause redemptions? You can't hit the sell button and get your money out. Okay. You cannot hit the sell button. You're basically stuck in that fund for good or worse. Right. And for, Blue Owl Capital, this obviously went worse, right? They were trying to basically merge their private credit funds. But the OBDC2 was going to take a really huge, I think it was like a 1/5 haircut. So 20% haircut on every investor in there. So if you had put a hypothetical 100,000, you were immediately going to lose 20,000 on top of whatever the losses already were. Right. So yeah, obviously the investors fought against that. They didn't want anything to do with that. They said, no, you need to keep the funds separate. So now Blue Owl Capital, they said, okay, well, we need to pause redemptions. You guys are asking for your money out. And now here we are, right? So what Blue Owl Capital is doing is they're selling off a bunch of assets. And what they're going to do now is allow investors to take out money on a rolling quarterly basis. Okay. Because they need to sell assets in order to honor those redemptions. So this is just more or less a case study in risk and risk management and, understanding what you're investing into, et cetera. Because again, there's a lot of investors who went into this, the Trump administration was saying, hey, we're going to open up private credit to 401ks. Right. And that sounds really cool, right? Private equity, private credit, they're all pretty much the same. We're going to open this up to 401ks. And that sounds so cool because that's what, the really wealthy investors do. The problem is, this is, a case study in what happens when things go wrong. All right. So again, as investors, we need to just be aware of this stuff. Just because it's a private placement memorandum, just because it's a syndication, just because it's, a private, private investor or private credit, it does not mean it's good, right? It does not mean it's good. You can make a lot of money in the public markets, just a general stock market by itself. I myself have been in some private funds. Some of them did not work out. Okay. I'll be honest. Some of them total loss. Okay. So this is why you have to be very careful, do due diligence on not just the company, but the team that's managing it and the assets that they hold. All right. So just wanted to share that little bit of information. Again, slow news day, but I wanted to cover this because a lot of people do invest in Blue Owl as a BDC. One second. Oh my God, this medicine is not working. Okay. I found this from the Kobesi letter. I thought this was really interesting. Again, when we're talking about the software rebound and the SaaS apocalypse and what's been going on, retail investors are pushing into software stocks at a record pace. Individual investors have bought software stocks for 7 consecutive weeks, the longest streak since at least 2017. The magnitude, persistence, and breadth of buying activity has significantly exceeded all prior peaks, according to Citadel. The pace of these purchases now equals 66% of the total net inflows posted during the entire 2025. Furthermore, from January 2nd to February 13th, average daily retail daily demand for U.S. equities was 25% higher than the prior record in 2021 and double that of 2020 and 2025 average. All right, retail is betting heavily on software stock comeback. All right, we covered a video from Tom Lee yesterday. We also covered another video. I forget the individual's name, basically covering that, we could potentially be in this bottom. I mean, this is a pretty dramatic sell-off, guys, like a 30% drawdown. That's pretty big, especially for an index-based, type of ETF. So software has violently sold off over the last couple of months. This could be that bottom, and it looks like investors are betting that it is, right? And now they're starting to pile in. But again, over the last 7 weeks, so you're counting basically since the new year, investors have been piling into, software, expecting some type of a rebound. For me personally, I did increase my PLTW position. I think I mentioned this yesterday, but I did increase my PLTW position and my NVDW position. Even though NVIDIA is more of a hardware-based, company, semiconductor. But Palantir, again, I think the market just has the story wrong with Palantir, and you still have Michael Burry out there talking his nonsense. He's been right. He had 2 correct predictions over his last 200. I mean, it's true. But, don't get me wrong. Michael Burry's still a really, really smart guy. I don't really have a negative opinion or a good opinion about him. And again, it's just my opinion. But with that being said, I did increase, like I said, the Palantir position. Mizu Securities did, they lowered their price target for Palantir, but at the same time, they said they expect it to outperform. So I thought that was a good opportunity to pick up, some PLTW shares. So, yeah, software is looking good. All right, moving on. This, I think, is a pretty nice signal, at least for the commodities sector, especially in oil and gas. Okay. This is, again, coming from the whole Venezuela fiasco, debacle, whatever you want to call it. But Shell is saying that they finally got exploration licenses for Venezuela, okay, where they're going to go in and basically rehab and start, their gas project, their Dragon gas project, okay? So it would not be unsurprising if ExxonMobil or other, energy companies start moving into the area. And again, if you're bullish on commodities, the oil sector has been popping up a lot. Now that the metals sector kind of just is taking a breather right now and consolidating, shaking out a lot of the euphoria, getting rid of basically all the tourists. But now it looks like oil and gas is starting to have its run, right? We saw that, with you can look at something like, let's see, I think it's USO. Maybe that's not it. Let's see. Maybe that is it. Well, yeah, sort of. I mean, I would take this. All right, so this is United States Oil Fund. Okay, so you guys can see right here, oil's just been increasing over value. Not the best, not the best indicator. We could look at something like maybe an XLE, right? XLE, energy stock or energy ETF, and you guys can see year to date up 20%. All right, and if we look over the last, basically the last couple of decades, you guys can see this is that breakout period, right? We talked about this in another stream where this could potentially be that breakout for energy. Again, so much tailwind for energy, and the United States is not building more solar farms. All right, they're basically moving away from solar. The Trump administration has halted a lot of windmill or wind turbine projects, and been focusing a lot on oil, gas, and in the future, nuclear. So this could be that breakout for energy. There's a lot of demand, data center demands, right? States, we talked about this as well yesterday. Some states don't want data centers in their backyard because that's going to increase, the cost of power, the cost of electricity, the cost of energy, right? And that will be downward pressure on, the average American household. So some, locales don't want data centers in their area. They don't want to pay higher electricity costs. So it's a balancing act, but it looks like the energy sector is starting to have a nice breakout. Excuse me, guys. All right, moving on, going to the Supreme Court. This is huge news. We're going to finally get an opinion on what they have to say. They're not going to rule. At least I don't see a ruling happening, or at least from what I've been reading. It's more or less they're just going to be offering an opinion. But Goldman Sachs ran a survey of 200 investors to see what their thoughts are. Most investors expect the Supreme Court to block Trump tariffs in 2026, Goldman Sachs says. The survey found that 78% of respondents believe the court will block the reciprocal tariffs from 2025, though only 30% expect the ruling to result in refunds for previously paid duties. So despite the expectations of tariff relief, a surprising share of investors anticipate further fiscal stimulus this year. According to Goldman Sachs, 43% of respondents expect some form of tariff rebate or tax cut, including a potential $2,000 per person payment. That they were calling that the dividend or whatever. And it's funny. He always brands it as such. But the Trump dividend, right? Really, it's the tariff dividend, I suppose. Elon Musk had proposed this last year. And then it looks like the Trump administration basically took that and ran with it. The survey also revealed that 60% of investors project a large increase in defense spending, with a majority expecting a boost in defense funding of at least 10% in the coming year. This year, another 10%. Why not? On top of the already ballooning defense budget, right? As the administration pursues a $1.5 trillion budget target. Okay, investors are increasingly looking to the Federal Reserve for relief on housing affordability. According to the report, 2/3 of respondents expect the Fed under new leadership to take action aimed at lowering long-term interest rates, with most anticipating coordination with the Treasury. We talked about that yesterday, right? The Fed is going to be probably more or less working in tandem with the Treasury, which they shouldn't be. But that's probably what's going to happen. You're going to have Kevin Warsh in there, and he's going to be, a Trump appointee. He's going to do probably what Trump wants. And what Trump wants is lower interest rates, right? Again, $38 trillion in debt in the United States. It's about $1.2 to $1.3 trillion in interest a year. And you have a lot of that debt coming due very soon. So they got to refinance the debt, and they don't want to refinance at a higher rate or at the current rate. They want to refinance at a much lower rate. Okay. So, again, we covered this. They shouldn't be the Fed, the market wants an independent Fed. It's important, not just for the United States. It's important for global markets. So if they start working with the Treasury, does that mean volatility, right? Does that mean uncertainty? Does that make gold more attractive, right? These are the questions that I start asking. So my answer is yes, it makes gold more attractive because, again, what are they going to do? They're going to print, baby, print. All right. So anyways, moving on from that, Kalshi, right? I wanted to see if Kalshi had a bet going on, right? Will the Supreme Court rule in favor of Trump tariffs? Right now, there's a very low 25% chance that they will. Okay. So what are the implications of something like this? What are the implications of the Supreme Court rolling back these tariffs, right? What will happen? What's the impact on the stock market? I honestly cannot think of what the impacts would be, whether they're positive or negative. I would probably err on the side of positive. I don't know what what the potential implications could be, but I would just assume it would be positive for the stock market. Because again, you still have a lot of companies that were buying stuff, from overseas, and there's this debate out there whether true or not true. I don't know what side you guys are on. I could honestly, I don't care. But are they passing it on to the consumer? Is the consumer paying more for this stuff, or is it a tax on the companies, shipping stuff in, blah blah blah, right? All that stuff comes into question. So if they were to remove the actual tariffs, what would happen to the companies in the stock market, right? And I know, I've talked to a couple, small business owners, people who actually, ship things from outside of the United States. Like I didn't know, we used to have a guy in here who made sauces, right? Who made salsas and things of that nature. I did not know that it is hard to find jars in America. Like you cannot find jars. Something as simple as a jar. You can't find it here in America. It comes from somewhere else, like probably Mexico or India. Same thing with garlic. Garlic is not grown naturally in the United States, right? Farmers don't buy garlic here. They usually get it imported from places like Vietnam or down in Central or South America. So again, it is interesting to see what's going to happen when these tariffs, if they get, taken away, right? Let's see. So John Logan said they already can't find buyers for treasury notes, which lowers interest rates, will make it much harder. Absolutely true. People, and this is an interesting point. Again, I always bring this topic up, or this finer point that, China has been dumping a lot of treasuries. As a matter of fact, if I could find it here in the Discord, let me see if I can find it real fast. But there's been a lot of countries dumping U.S. treasuries. It's not just China. It's a ton of them. And again, when the United States can't find buyers for their treasuries, that's not good. It's going to make the long-term debt interest rates start to rise. All right. So let's take a look here. So yeah, here's the top buyers of U.S. debt. Okay, we have mostly Western aligned, and this is from let's see, what was it, 2024? Yeah, 2024 to 2025. So this is still fairly recent. But who's buying most of the debt, right? You have the UK. You have basically mostly Western aligned or allied countries, partners, etc. Right? Norway, Canada, Japan, Belgium, Great Britain. France, the United Arab Emirates, etc. Right? But who's been selling the most? You have China. The biggest competitor to America is China, right? And America has been trying to wean itself and basically, get away from China's supply chains, and China's not too happy about that. Also, you look at Brazil, India, and China. These are three nations that are inside BRICS. Okay, BRICS again is trying to move off the U.S. dollar. Okay, so interesting stuff here, right? All right, moving on, guys. Gold, silver, little change as geopolitics, upcoming U.S. inflation data in focus. We kind of already covered most of this, really. But, gold, silver, they held steady. We already covered that, right? They're not really jumping up extravagantly high. They're not really going low. And the only catalyst is because of geopolitics, right? But this was a big piece right here. U.S. weekly jobless claims fell to 206,000 in the week ending February 14th, below estimates for a reading of 225K. All right, reinforcing the strength signaled by last week's strong monthly employment report. Trump warned Iran that it must reach a deal over its nuclear program or bad things will happen, right? And it's probably going to happen sooner than 10 days, right? The last time he struck Iran, he said, yeah, we're going to think about it, maybe we'll in a week. And then he struck, within a day, right? Within 2 days. And I do, like I said, I still have, some friends in that area, and things are getting extremely spicy. You also have on X, people like freights moving, military assets moving up and down. You could track these planes, right? There's a ton of planes in the sky right now. That was in the sky that was moving a bunch of U.S. assets back and forth, whether that was, artillery, whether that was air defense or troops, etc. There was a huge amount of traffic. But anyways, there's also renewed flare-up in worries over a potential U.S.-Iran war was offset by uncertainty over U.S. monetary policy, with attention turning to Friday's PCE report, the Fed's preferred inflation gauge, for further clues on the central bank's policy trajectory. You guys already know that the Fed has been extremely worried about two things and two things only, and one is inflation and two is the job market, right? They've been more focused on that than anything. If we're looking at Truflation, which is I think it's a pretty decent gauge. Wall Street has been using Truflation a lot, but you guys can see here, we're still under 1%, okay? It was at like 78 basis points. Now it's at 94 basis points. Truflation uses, active live data versus a lot of these other data points that, the BLS will produce or that the government produce, which is backwards looking. Scott Bessent himself has said that he looks at the Truflation numbers. So again, you have Washington and Wall Street looking at these numbers. Okay. So interesting point. So we also have news on the Clarity Act that it's just a short clip. But this is a pretty long interview. I think people who are interested in the Clarity Act, bill and kind of the thoughts behind it should look at it. Again, the whole point of the Clarity Act bill is to identify which cryptos or which, basically which cryptos go into which bucket, the SEC bucket or the CFTC, right? The commodities bucket, right? So how are they going to be treated? Are they going to be treated as securities or commodities? And that's basically what this Clarity Act is going to explain for everyone. Hey, Farouk, what's up, man? Thank you for joining. So, excuse me, guys. Sorry about that. So let's listen in on U.S. Senator Bernie Moreno talking about the Clarity Act. All right, Brian Armstrong is right next to him.
Cash on reserve, be able to get paid quicker, be able to transact faster, democratize the financial systems. But we're going to get this bill across the finish line. But I would say
when?
Hopefully by April. Hopefully by April.
I was going to say, because if you don't by the midterms and then the House goes Democrat, then what happens to it?
Well, the House isn't going to go Democrat, neither is the Senate. People say, well, the election were today. The election is not today. We're going to win because, look, at the end of the day, the American people are sick and tired of open borders.
Let's end that. Anyways, by April, okay, by April is when they hope to get this completely wrapped up and done. There's a rumor out there that they're expected to vote on it by March 1st. That is a deadline that has been thrown around. I have not found any credible sources saying that, but by April seems probably just as likely, right? This is the actual senator who's also been working on the Clarity Act, and you have Ben Armstrong right next to him as well. So by April we should see what's going to happen with the Clarity Act, if it gets passed, what the changes are, because again there is a lot of friction around stablecoin rewards. So we'll see again what comes of that, what changes were made. We have Super Straight Guy saying XRP to the moon. Absolutely, man. Shout out to any XRP holders. I don't hold any myself, but I know it's been a wild ride for a lot of people. All right, moving on. Arizona, this is for Bitcoin, moves towards state Bitcoin reserve. All right, again, another bullish signal for Bitcoin. So while people are selling out, while people are consuming all the doom, gloom, and FUD and selling out of their Bitcoin, states are moving towards Bitcoin reserves and creating their own Bitcoin reserves. Okay, so this was really, really big news. I'm not going to cover it because that's pretty much it, right? Arizona is another state that is going to be moving towards a Bitcoin reserve. And just real quick, there's only a couple other states that have it, that currently have it, and that Texas is one of them, and New Hampshire is the other, right? If we look at a map, these are states that have bills moving through it, or they're considering it, or they are passing it, or actively engaged in it. Okay, so big deal, right? This is an older map, but this is a big deal, guys. These are U.S. states that are moving towards adopting a Bitcoin treasury, right? So is that a bullish signal? You guys tell me, right? Is Bitcoin still considered the Ponzi scheme if governments are considering it, if nation states are considering it, right? We covered yesterday that Brazil was also moving towards this. They want to acquire 1 million Bitcoins in 5 years. You also already have, El Salvador that is already doing this. So is that bullish for Bitcoin? I think so. And again, as people get scared out, I think, the other money is moving in, whether it's smart money or government money. And I know the Bitcoin thesis out there, a lot of Bitcoin maxis are going to be like, well, it's funny. In the Bitcoin maxi space, I've seen it both ways. People are like, oh, this is bullish for Bitcoin. But the whole point was to have decentralized Bitcoin, right? It was to not have one entity or be free from government control, et cetera. To also have something other than fiat currency, right? They're betting against fiat currency, and now you have governments that are going to centralize this stuff. Not in the technical sense, but they're basically going to hold a lot of Bitcoin, and you also have MicroStrategy, which holds almost as much as Satoshi Nakamoto's wallet. So it's a very concentrated amount of Bitcoin. Just some quick news here. All right. State Street Corporation just disclosed that they bought 138,000 more MSTR shares, and they now hold 6.12 million shares, which is valued at roughly $775 million. All right. So this is, again, another signal. Stupid money was getting out of strategy. People are, it's oversold. It's all the fear, doom, and gloom's already, kind of in there. All the paper hands got shaken out. All the tourists got shaken out. And now smart money is starting to move in. I spoke about this at length, that I really do think that it was a psyop for a lot of people, where these large banks, institutions, et cetera, smart money, they start pumping the FUD when Bitcoin goes down. MicroStrategy is going to implode on itself. It's under its cost basis. It's going to collapse, all this stuff. Meanwhile, you had the UAE buying up Bitcoin, right? UAE wealth management, or excuse me, their sovereign wealth fund buy a bunch of Bitcoin. And then you're having all of these banks and institutions increasing their share count in MSTR, right? I don't know. Is that a signal? You guys tell me, right? Moving on to commercial real estate. I just want to cover this. I know a lot of you guys probably don't own commercial real estate, but again, I still think it's important, especially if you're, an investor in real estate, if you have rental properties, or if you're just, a student of the finance space. I like to peep in on this because I do have active, commercial real estate under my belt and in my portfolio. Not so much REITs. I sold pretty much all of my REITs a long time ago, but I like to keep an eye on what's going on in that space because, again, it is important. You could have that domino start to crack or start to fall and then have another 2008, 2009 style, scenario play out. Okay. Let's see. So going back, John Logan said, isn't the Clarity Act just government controls on digital assets to begin with? Identity. It's identity of the assets. And how are they going to regulate it? That's really it, right? Is it a commodity or is it a security? So that's pretty much it. Build says, Sailor still buying. Absolutely. The guy only has one mission: just buy Bitcoin and never sell. That's his whole thing. And, real quick, I just want to go back to this, and I don't mean just strategy. I'm talking about Bitcoin in general. The cool thing about investing in Bitcoin, for me, I invest in IBIT, right? So I don't have because I don't want to deal with wallets, cold wallets, storage, all that other garbage. I'd rather just put my money into IBIT. The cool thing about investing in Bitcoin is you don't need to think about it, right? If you're bullish on Bitcoin, You don't have to think about it. Whereas in the stock market, you have ETFs coming out every single day with new strategies, higher yields, new stocks coming out, IPOs, this and that, and blah, blah, blah. Earnings reports are good. Earning reports are bad. Stock go up, stock go down. With Bitcoin, it's just Bitcoin, right? Same thing with gold. With gold, it's just gold. You just put your money into gold or Bitcoin, and that's it. There's no thought process to it. It's one of the most simplest forms of investing. It's like investing in the S&P 500, right? Investing in the S&P, you don't think about it. You just put your money in it. You don't care what's happening in the broader world. If you're betting on the American, economy, the American markets, American companies, then an index is pretty damn simple, right? So I liked the idea or the concept of or maybe the perspective is probably the better word for investing in Bitcoin. You don't think about it. You just do it, right? British Hodl, shout out to him. He has the famous 3 rules, which I won't repeat on this channel. But, rule 1 and 3, I will repeat, right? You buy Bitcoin. 2, I'm going to leave blank. And then 3, you just become fabulously wealthy, right? That's it. It's simple, right? And that is why I like investing in something like a Bitcoin or, for me, IBIT, right? It's stupidly simple. Whereas if you're investing in commercial real estate, there's 1,000 variables that go into this. Anyways, let's talk about commercial real estate, guys, so we can get this stream going because we are at minute 50. Okay, so commercial lenders shift from extension to enforcement. We've talked about this several times on this channel, where you had this big wave of debt that needed to be refinanced, and what the banks were doing was they were doing this extend and pretend. They've been doing this since about mid 2022, 23, 24, and even now, right? They've been doing this thing called extend and pretend. Basically, the net of this is a lot of real estate companies, a lot of real estate investors bought up real estate when interest rates were zero, like pretty much near zero. And then in 2022, we had this huge spike up in the interest rate, right? Jerome Powell, the Federal Reserve, spiking interest rates like crazy. And this debt was only good for about a year. And depending on what type of debt they took on, a lot of them took on variable rate mortgages, which means that the mortgage will rise with the federal funds rate, right? With the interest rate. That crushed a lot of real estate investors. A lot of real estate investors had to foreclose on their properties, which is terrible. Like I've saw deals as large as 250 million just get completely wiped out, right? Where they had to basically give the building back to the bank. So anyways, a lot of these real estate investors, they were just saying, hey, we just need a little more time. We need the value of the properties to come back, right? Because we don't want to refinance at a lower valuation for the property. That's not good, right? That's going to destroy your cash flow. That's basically going to destroy the whole deal, right? So banks were like, okay, we'll just give you some more time. We'll give you another 6-month extension, another 6-month extension, another 6-month extension, et cetera, et cetera, et cetera. But now it's getting so bad to the point where these lenders are like, no, we're forcing you to refinance now. You need to refinance or sell the property. As a matter of fact, I just came across a couple deals that my friends were in, and they had their real estate investments get forced refinanced, right, at lower valuations, which is obviously not good for the deal. Or they got refinanced, but the terms were not good. Right. Instead of getting that, coveted like 30 or 45 or even 25 loan to value, now they're getting at like 60, right? 60 loan to value. That means they have to put up 60% of the money in order to get refinanced. Freddie Mac, a lot of these big time lenders for commercial real estate, they're just not accepting it anymore, right? They're not allowing it anymore. So now you're going to have all of these either foreclosures happening, like we see with do I have it here? Yeah, CBL Properties. All right, this was also in the news just a few days ago. But retail landlord CBL Properties has to hand back their malls because they cannot refinance the debt. Right? They can't. The property values are not where they were when they bought the malls. They're actually lower. And also, you talk about cash flow and everything else. At least in the multifamily space, you had places like Texas where, mass migration, work from home, people were leaving California to move to Texas. So you had these apartment buildings that were, getting insane amounts of rent, but then inventory was also coming online, new apartment buildings, right? So now you have more apartment buildings. So rents came crashing down. When that happened, right, all these deals were stuck. They were stuck not only with bad debt that needed to get refinanced, but the property values still have not returned to what they were back in 2022, right? Or 2021. They have still not recovered. So again, this is a big deal. Like, this is a really big deal, because if you're going to have this mountain of foreclosures happening, that could be a piece of the crack that starts to happen for the broader economy, right? Another 2008, 2009 style, real estate recession, right? That's not good. I just want to cover this. Approximately $875 billion worth of commercial real estate debt is scheduled to mature in 2026, representing about 17% of total outstanding commercial mortgages, while this marks a 9% decrease from the $957 billion maturing in 2025. All right, it was close to a whole $1 trillion. All right, it remains part of a significant multi-year maturity wall of loans originated at lower interest rates, all right, which we pretty much already covered. And this is it. This is what is impacting them, right? Office and retail sectors face the most pressure due to reduced property valuations, while industrial multifamily sectors continue to show relative strength. But again, multifamily, it depends where. It depends where. Not every market, when people say, oh, the real estate market is bad, it's like, okay, what market? There's X amount of states, thousands and thousands of cities, locales. Like, what are we talking about here, right? So to paint it in a broad brush is incorrect. But some markets are doing better than others. The Midwest is doing better than the South and the Sun Belt regions. You have the Northeast, which is actually doing really well. And then of course you start putting in political pressure, rent freezes or whatever. That can also play a part in all of this as well. So, anyways, I thought this was a really interesting thing to cover. I know most people don't have commercial real estate, but again, you got to be aware of what's happening all around, right? Actually, that is it. That is it for it, right? That's us. That is it for the stream. Let me check the chat. Let's see. You clearly have solid conviction in crypto. What are you most skeptical about investing in crypto? This is coming from Comic Book. Always asking the good questions. I don't even know how to answer that, man. Like, I'm so bullish on Bitcoin and Ethereum. It's hard to find the bear case. The same thing with like MSTR. Like, I have not heard of a bear case that really stopped me to think or made me stop to think about my conviction in these assets, right? In these coins or in this like BMNR or even MSTR. People like they'll use personal attacks, but they won't have any evidence to support it, right? They'll call like Saylor, Tom Lee a scam artist. They'll say BMNR, MSTR are Ponzi schemes. BMNR has no debt. Hear that one more time. BMNR has no debt. They're sitting on $630 million worth of cash. All right. And they only have a set mission: acquire more Ethereum, stake some of that Ethereum, Project Maven, right? Because they're creating their Made in America validator network where they're going to stake other companies' Ethereum. They're really involved in the Ethereum Foundation and spreading, Ethereum, technology. Not only that, they have their moonshots, right? Their $200 million investment in Beast Industries, and what was it, like a $17-20 million in investment in Orb, right? WorldCoin. I have not heard of a really solid bear case against them that made me stop to think and go, right? Even with strategy, people are like, oh, well, he's going to dilute it. You're going to go to zero. It's like the whole point of investing in MSTR common stock is to get more Bitcoin per MSTR share. It's like, well, why don't you just buy Bitcoin? That's a very valid point. That's a very valid question. And the only thing I could come to, right? The only answer I could come to is you could, right? You can. But if you want a leveraged, proxy to Bitcoin, i.e. MSTR, well, then you can go with MSTR versus something like, I don't know, whatever the 2x leveraged ETFs are for Bitcoin, because they have NAV decay, right? Or not NAV decay. They have volatility decay, right? Path dependency problems. They reset every single day, whereas MSTR is just a pure leverage proxy for Bitcoin, right? So if you're bullish on Bitcoin, then you're going to be bullish on MSTR, in my opinion. Okay, just my opinion. But you also look at the company and how it's structured. MicroStrategy, I can't find a reason to hate it. Like I really can't. If you're bullish on Bitcoin, then you should be bullish on MSTR. People say that, you know, he's underwater, he's in so much debt. No, that is not the case. They raised, again, $2.2 billion to cover an $888 million dividend over the next 2 years. They have $60 billion worth of Bitcoin on their balance sheet. Even if they were to have to sell a little bit, they're fine for the next 60 years, right? Whatever it is. We just have to be patient, right? So I have not found anything that would, you know, make me think contrary to my conviction in these two. Now, when it comes to the other altcoins and the shit coins and meme coins, I stay away from all of that. You know, I'm just super bullish on Ethereum and super bullish on Bitcoin. I can't find a reason not to be bullish on those two. Again, you have the Ethereum cycle, the Ethereum super cycle. We covered this in the last stream. You have a lot of banks moving onto Ethereum, right? You have Bank of America working with Swift on a Ethereum-based, cross-border, transaction system, right? So again, like, what's not to like about Ethereum? It's just hard not to, in my opinion. But of course, you're going to find the FUD, especially on, X. You're going to find the FUD on YouTube in the comment section and everything else. But again, when you challenge these people and you ask them, like, okay, give me your best bear case, they're going to say one of those two things. They're going to get liquidated, or they're a scam artist, like that, or a Ponzi scheme. Like those, like that's the best you got. You can't explain like why you don't like it, and even then, with all the reasons I just listed, like it destroys most of those arguments. So anyways, I just wanted to use that. Hatter or hater on BMNR always, it says super straight guy. Howard Marks, one of the most important parts of being an investor is to be a skeptic. I agree. That is 100% true. But that's the thing. I haven't found a reason to be skeptical. Like, I have not found something that would make me believe it to the contrary, right? To have an anti-conviction, I suppose. Here's for Bitcoin. Here's what I don't believe about Bitcoin. I don't believe it's going to be the world reserve currency, right? I don't believe that one bit. I don't believe we're going to settle things in Bitcoin, right? I don't believe that one bit. That's some of the Bitcoin maxi, thoughts out there. I don't believe that, right? I'm an investor. I'm trying to make a buck off of Bitcoin. I'm trying to make some money off Bitcoin. I'm using it as basically a savings, a savings account in my portfolio. So I don't believe for 1 second that story. Like, I've read bits and pieces of the Bitcoin Standard. I really should go through the whole thing. I have not read it cover to cover. But again, like those are some of the things that I don't believe Bitcoin. Like Bitcoin's going to be that. For Ethereum, like, I did not know too much about Ethereum only until recently, and again, the proof is there. Companies are moving towards Ethereum. They're moving on chain. It's 100% uptime, has yet to be taken down. The bear case against Ethereum is, they have an unlimited supply, unlike Bitcoin, which has a fixed amount, right? But when you factor in, how much Ethereum that they burn on a daily basis, you guys would have to come to your own conclusion on that. I think it's obviously a good thing, and it just makes Ethereum a little more attractive. But people say, oh, it has an unlimited amount of supply, and ergo, it's not a good store of value. It's like, well, I don't think that's the mission of Ethereum, but those are my thoughts. Let's see. My problem with crypto is it really doesn't work as a currency until you pay for your meal in a restaurant or fill up your gas tank with it. This is true, 100%. 100%. But again, I don't think the case for, at least Bitcoin and Ethereum, it's no longer about being used to pay for everyday stuff, right? There's other use cases for it. For Ethereum, again, I just explained, the whole blockchain building on the rails, et cetera. It's not going to be, used in transactions. At least I don't think so. Maybe you might have some companies do it, but I can't see it, being done by and large. Years and years ago, 2000, like maybe 12, 13, you had everyone, like airline companies accepting Bitcoin payments, right? You had like Orbitz, right? I think it was Orbitz that it was accepting Bitcoin. Yet all these companies starting to accept Bitcoin, and then that just really died off really fast after Bitcoin went into this like really bad winter. But yeah, I mean, I agree with you 100%. That it is not a currency, but I don't think it's again, I don't think it should be a currency. I don't think it'll be used as a currency. Does it have other use cases? Absolutely. We saw this in Syria. We saw this in Russia. We saw this wherever there's a run on the bank happening. Bitcoin will go up because everyone's getting their money out and moving it to Bitcoin, right? Because they can put it on a thumb drive, hop on a plane, end up in another country and be perfectly safe, right? They still have all of their wealth in Bitcoin. They took it out of the fiat currency, right? Again, when Russia, was taken off the SWIFT system, a lot of people were moving their money onto Bitcoin. There's a ton of money inflows into Bitcoin. And it's because you could just, again, put it on a wallet, hop on a plane, get out of Dodge while the getting is good. So, also, it is faster than ACH. I don't know if you guys have ever used ACH or the SWIFT system, but way, way faster. The fees are way, way less. You could transfer, a couple Bitcoin or USDC cross border pretty quickly and pretty fast, right? It doesn't take a whole lot of time. No 3-day waiting or processing, period. You put your money in, you wait 10, 15 minutes, and then it ends up in the other wallet, right? So there are use cases for it. But again, you're absolutely right. I don't think until you can pay for gas with it, it's pretty much not going to be anything. I think in El Salvador, they have some form of that. They do have some form of that where you can pay for certain things, but like restaurants are not accepting Bitcoin, right? So you're absolutely correct on that. Anyways, guys, I think that's going to do it for me. I'm sick as a dog, and I don't want to keep talking and coughing all over the place. I don't want to get you guys sick. I do appreciate you guys joining me for this news stream. As always, it's been a pleasure. Thank you for cutting it up with me in the chat. I hope you guys enjoyed this stream. Hope you guys got some value from it, at least hopefully some entertainment. So with that being said, you guys have a great rest of your night, a great rest of your evening, wherever you are in the world. And I will see you guys in the next stream. You guys take care.